1. A corporate entity registered under the Bangladesh Companies Act, 1994 prepares its statement of profit or loss and other comprehensive income. Which accounting standard strictly governs its formatting and structure? Option 1. IAS 1 Presentation of financial statements. Option 2. IAS 2 Inventories. Option 3. IAS 7 Statement of cash flows. Correct answer is IAS 1 Presentation of financial statements. 2. Dhaka traders purchased a commercial delivery van. The accountant mistakenly charged the annual vehicle fitness and registration fees paid to the Bangladesh Road Transport Authority (BRTA) to the motor vehicles asset account. What is the impact on the basic financial statements? Option 1. Assets are overstated, and net profit is overstated. Option 2. Assets are understated, and net profit is understated. Option 3. Liabilities are overstated, and equity is understated. Correct answer is assets are overstated, and net profit is overstated. 3. A manufacturing firm in Chittagong has an opening inventory of 80,000 takas, purchases of 500,000 takas, carriage inward of 20,000 takas, and closing inventory of 60,000 takas. Calculate the true cost of goods sold (COGS) to be reported in the trading section of the income statement. Option 1. 540,000 takas. Option 2. 520,000 takas. Option 3. 480,000 takas. Correct answer is 540,000 takas. 4. An auditor reviewing the books of a retail firm notes that a 15,000 takas provision for employee bonuses was omitted at year-end. Adjusting this error prior to finalizing the financial statements will cause: Option 1. An increase in current liabilities and a decrease in retained earnings. Option 2. A decrease in current liabilities and an increase in gross profit. Option 3. An increase in current assets and a decrease in net profit. Correct answer is an increase in current liabilities and a decrease in retained earnings. 5. According to IAS 1, which of the following items must be explicitly presented as a separate line item on the face of the Statement of Financial Position balance sheet? Option 1. Trade and other receivables. Option 2. Administrative expenses. Option 3. Depreciation expense. Correct answer is trade and other receivables. 6. During a period of rising prices inflation, which inventory valuation method under International Financial Reporting Standards (IFRS) yields the highest net profit on the income statement? Option 1. First in, first out FIFO. Option 2. Weighted average cost method. Option 3. Last in, first out LIFO, since it is prohibited under IAS 2. Correct answer is first in, first out FIFO. 7. A firm in Sylhet fails to record an adjusting entry for accrued but unbilled rental revenue at the end of the financial year. What is the cumulative effect on the financial statements? Option 1. Assets are understated, and net income is understated. Option 2. Liabilities are understated, and equity is overstated. Option 3. Assets are understated, and liabilities are understated. Correct answer is assets are understated, and net income is understated. 8. Padma Electronics sells goods worth 200,000 takas on credit with terms 2/10 and 30. If the customer clears the payment within the discount period, how is this recorded transaction presented in the financial statements? Option 1. Net sales revenue is presented at 196,000 takas on the face of the income statement. Option 2. Gross sales remains 200,000 takas and the 400,000 takas discount is categorized under finance costs. Option 3. Sales revenue decreases by 4,000 takas, and liabilities decrease by 4,000 takas. Correct answer is net sales revenue is presented at 196,000 takas on the face of the income statement. 9. A company sells an obsolete manufacturing machine for 45,000 takas cash. The original cost was 200,000 takas, and its accumulated depreciation up to the date of sale was 140,000 takas. How should the outcome be presented in the financial statements? Option 1. A loss on disposal of 15,000 takas reported within operating expenses. Option 2. A gain on disposal of 45,000 takas reported within other income. Option 3. A loss on disposal of 155,000 takas reported directly in equity. Correct answer is a loss on disposal of 15,000 takas reported within operating expenses. 10. In a complete set of financial statements prepared according to IFRS, what is the core purpose of presenting the statement of changes in equity? Option 1. To reconcile the opening and closing balances of owner's capital, reserves, and retained earnings. Option 2. To report the external market value changes of the company's publicly traded shares. Option 3. To display the cash distributions made exclusively to corporate lenders and debt holders. Correct answer is to reconcile the opening and closing balances of owner's capital, reserves, and retained earnings. 11. If a firm's current ratio is 3.0, 1 and it settles an outstanding trade payable utilizing cash, what will be the mathematical impact on its reported current ratio? Option 1. The current ratio will increase. Option 2. The current ratio will decrease. Option 3. The current ratio will remain unchanged. Correct answer is the current ratio will increase. 12. Under the going concern concept, an accountant values long-term machinery at its net book value rather than its current liquidation value. If this assumption is invalid for a business-facing liquidation, financial statements must be prepared on a Option 1. Breakup value basis, liquidation basis. Option 2. Historical cost basis with extra footnotes. Option 3. Fair value through other comprehensive income (FVOCI) basis. Correct answer is breakup value basis, liquidation basis. 13. While compiling financial statements, an accountant reconciles the bank balance. To arrive at the correct cash balance for the balance sheet starting from the unadjusted bank statement, unpresented checks must be Option 1. Deducted from the bank statement balance. Option 2. Added to the bank statement balance. Option 3. Completely ignored as they only alter the cash book balance. Correct answer is deducted from the bank statement balance. 14. A business spends 500,000 takas to construct a research prototype. Under IAS 38 Intangible Assets, if this expenditure meets the strict definition of research phase rather than development phase, it must be presented as Option 1. An operating expense in the statement of profit or loss. Option 2. A non-current intangible asset in the statement of financial position. Option 3. A deferred revenue expenditure item amortized over 5 years. Correct answer is an operating expense in the statement of profit or loss. 15. A firm increases its allowance for doubtful accounts by 25,000 takas based on an updated aging schedule of trade receivables. This adjusting entry impacts the financial statements by Option 1. Increasing operating expenses and reducing the carrying amount of trade receivables. Option 2. Reducing current liabilities and increasing net profit for the year. Option 3. Increasing non-current assets and reducing retained earnings. Correct answer is increasing operating expenses and reducing the carrying amount of trade receivables. 16. A textile warehouse in Narayanganj was damaged by a flood. Raw materials costing 300,000 takas were destroyed. The insurance provider settles a claim for 210,000 takas. How is this event summarized in the financial statements? Option 1. 300,000 takas is deducted from purchases, 210,000 takas is shown as an asset, and 90,000 takas is charged as an expense. Option 2. 210,000 takas is recorded as revenue, and 300,000 takas remains within cost of goods sold. Option 3. 90,000 takas is recorded directly as a reduction in share capital. Correct answer is 300,000 takas is deducted from purchases, 210,000 takas is shown as an asset, and 90,000 takas is charged as an expense. 17. An enterprise acquires a 5-year commercial leasehold right for 2,500,000 takas. At the end of year 1, the amortization expense presented in the income statement should be Option 1. 500,000 takas categorized under operating expenses. Option 2. 2,500,000 takas written off completely in the year of purchase. Option 3. Intangible items are not subject to periodic financial write-downs. Correct answer is 500,000 takas categorized under operating expenses. 18. Which of the following subsequent events occurring after the reporting date but before the financial statements are authorized for issue requires a formal adjustment to the figures under IAS 10? Option 1. The bankruptcy of a major trade debtor confirming that a year-end receivable balance is unrecoverable. Option 2. A major decline in the market value of company investments due to economic shifts. Option 3. The destruction of a primary production plant by fire 2 weeks after the year end. Correct answer is the bankruptcy of a major trade debtor confirming that a year-end receivable balance is unrecoverable. 19. At the reporting date, a dealer's inventory has a cost of 1,200,000 takas. Due to damage, its estimated selling price is 1,100,000 takas, and completion selling costs are estimated at 50,000 takas. At what value should inventory be presented in the statement of financial position? Option 1. 1,050,000 takas based on the lower of cost and net realizable value (NRV) rule. Option 2. 1,200,000 takas based on the historical cost principle. Option 3. 1,100,000 takas based on the expected gross realization. Correct answer is 1,050,000 takas based on the lower of cost and net realizable value (NRV) rule. 20. A company changes its depreciation model from the reducing balance method to the straight line method for its factory machinery. Under IAS 8, this change must be treated as a Option 1. Change in accounting estimate, applied prospectively in the current and future financial statements. Option 2. Change in accounting policy, requiring a retrospective restatement of prior period financial statements. Option 3. Correction of an accounting error, adjusted directly through opening cash balances. Correct answer is change in accounting estimate, applied prospectively in the current and future financial statements. 21. Drawings made by a sole proprietor in the form of business inventory worth 30,000 takas are adjusted when preparing financial statements by Option 1. Deducting 30,000 takas from purchases and deducting 30,000 takas from capital in the balance sheet. Option 2. Adding 30,000 takas to sales revenue and decreasing retained earnings. Option 3. Increasing current assets and increasing owner's equity. Correct answer is deducting 30,000 takas from purchases and deducting 30,000 takas from capital in the balance sheet. 22. Whereas, unearned revenue, advance payments from clients for services to be delivered next year classified in the financial statements. Option 1. As a current liability in the statement of financial position. Option 2. As operating revenue in the statement of profit or loss. Option 3. As a deduction from trade receivables in current assets. Correct answer is as a current liability in the statement of financial position. 23. If a trial balance contains a debit balance for a suspense account because the debit leg of a transaction was unposted, how is this handled if financial statements must be produced before tracing the error? Option 1. It is presented temporarily under current assets in the statement of financial position. Option 2. It is written off immediately as an administrative expense in the income statement. Option 3. It is added directly to the opening capital balance of the entity. Correct answer is it is presented temporarily under current assets in the statement of financial position. 24. An accountant notices that a credit sale of 95,000 takas was mistakenly recorded in the sales day book as 59,000 takas. Rectifying this error prior to finalizing the statements will: Option 1. Increase both gross profit and trade receivables by 36,000 takas. Option 2. Decrease net profit and increase current liabilities by 36,000 takas. Option 3. Have no structural impact on gross profit or total current assets. Correct answer is increase both gross profit and trade receivables by 36,000 takas. 25. Which financial statement tracks an entity's liquidity by classifying cash movements into operating, investing, and financing activities? Option 1. Statement of cash flows. Option 2. Statement of financial position. Option 3. Statement of profit or loss. Correct answer is statement of cash flows. 26. What is the correct presentation of capital reserves, such as share premium or revaluation surplus, under IFRS/IAS frameworks? Option 1. Presented as separate components under the equity section of the Statement of Financial Position. Option 2. Grouped alongside long-term bank liabilities under non-current liabilities. Option 3. Recognized as operating revenue in the statement of profit or loss. Correct answer is presented as separate components under the equity section of the Statement of Financial Position. 27. Under IFRS, which of the following is an example of an item categorized under Other Comprehensive Income, OCI? Option 1. Surplus arising from the revaluation of property, plant, and equipment under IAS 16. Option 2. Gains derived from the routine retail sale of finished inventory items. Option 3. Interest income earned on corporate bank current accounts. Correct answer is surplus arising from the revaluation of property, plant, and equipment under IAS 16. 28. A factory machine was purchased for 1 million takas. It has an estimated useful life of 5 years and a residual value of 100,000 takas. Calculate its year 1 depreciation expense under the straight line method. Option 1. 180,000 takas. Option 2. 200,000 takas. Option 3. 160,000 takas. Correct answer is 180,000 takas. 29. Given sales 800,000 takas, gross profit markup is 25% on cost of goods sold COGS. Calculate the absolute value of cost of goods sold. Option 1. 640,000 takas. Option 2. 600,000 takas. Option 3. 200,000 takas. Correct answer is 640,000 takas. 30. A company expensed a 3,000 takas office calculator immediately, even though it will remain operational for 3 years. This presentation decision is justified by which concept? Option 1. Materiality concept. Option 2. Historical cost concept. Option 3. Prudence concept. Correct answer is materiality concept. 31. An entity reports revenue of 1,500,000 takas, gross profit margin of 30% on sales, and distribution expenses of 150,000 takas. What is the gross profit value? Option 1. 450,000 takas. Option 2. 300,000 takas. Option 3. 1,050,000 takas. Correct answer is 450,000 takas. 32. Magna Corp. repays the principal portion of a long-term bank loan amounting to 500,000 takas. How is this transaction disclosed in the statement of cash flows? Option 1. Outflow under financing activities. Option 2. Outflow under operating activities. Option 3. Outflow under investing activities. Correct answer is outflow under financing activities. 33. Costs incurred to alter the layout of an existing production plant to increase its overall long-term production efficiency are classified as: Option 1. Capital expenditure, added to the carrying cost of the plant asset. Option 2. Revenue expenditure, written off instantly within administration costs. Option 3. Deferred asset, shown under current assets as a prepaid expense. Correct answer is capital expenditure, added to the carrying cost of the plant asset. 34. Trade discounts allowed to wholesalers at the time of invoicing are presented in the final financial statements by: Option 1. Reporting the sales revenue net of the trade discount on the face of the income statement. Option 2. Disclosing the discount as a marketing expense inside the distribution costs. Option 3. Showing the total discount as a contingent liability in the notes. Correct answer is reporting the sales revenue net of the trade discount on the face of the income statement. 35. If a manufacturing firm processes raw materials into finished inventory, where are the direct factory wages presented? Option 1. As a component of cost of goods sold within the trading section of the income statement. Option 2. Under administrative expenses in the profit or loss section. Option 3. As a direct deduction from share capital in the balance sheet. Correct answer is as a component of cost of goods sold within the trading section of the income statement. 36. Where should dividends proposed by the Board of Directors after the reporting date but before approval of financial statements be presented under IAS 10? Option 1. Disclosed in the notes to the financial statements, with no liability recognized on the face of the balance sheet. Option 2. Recorded as a current liability in the statement of financial position. Option 3. Debited directly as an expense item within the current period's income statement. Correct answer is disclosed in the notes to the financial statements, with no liability recognized on the face of the balance sheet. 37. Which of the following errors will prevent the trial balance from balancing, thereby delaying financial statement preparation? Option 1. Posting a debit entry to the ledger while entirely omitting the corresponding credit entry. Option 2. Entering a transaction completely into the wrong subsidiary day book. Option 3. A compensatory error where two distinct ledger accounts are understated by identical amounts. Correct answer is posting a debit entry to the ledger while entirely omitting the corresponding credit entry. 38. A company purchases land for a new regional corporate office. The legal registration fees and demolition costs of an old structure on the land should be: Option 1. Capitalized into the cost of the land asset item on the balance sheet. Option 2. Expensed immediately within the statement of profit or loss. Option 3. Presented as an adjustment in the statement of changes in equity. Correct answer is capitalized into the cost of the land asset item on the balance sheet. 39. Under the cash basis of accounting, financial statements fail to reflect an entity's true financial performance because they ignore. Option 1. Receivables and payables arising from credit transactions. Option 2. Cash collections from customer receipts. Option 3. Direct equity investments made by the company founders. Correct answer is receivables and payables arising from credit transactions. 40. Advance income tax deducted at source TDS from a company's banking transactions during the financial year is presented as. Option 1. A current asset under advance tax prepayments in the balance sheet. Option 2. An administrative expense in the current year's profit or loss statement. Option 3. A current liability under provisions for taxation. Correct answer is a current asset under advance tax prepayments in the balance sheet. 41. A company receives its bank statement containing a debit entry for bank charges of 5,000 takas that was unrecorded in its cash book. The adjustment required before finalizing statements is. Option 1. Deduct 5,000 takas from the cash book balance and present the adjusted balance in the balance sheet. Option 2. Add 5,000 takas to the sales revenue on the face of the income statement. Option 3. Increase trade payables by 5,000 takas under current liabilities. Correct answer is deduct 5,000 takas from the cash book balance and present the adjusted balance in the balance sheet. 42. The historical cost convention requires assets to be reported at their original transaction price. Which accounting concept justifies this practice despite inflation? Option 1. Money measurement and going concern concepts. Option 2. Materiality concept. Option 3. Dual aspect framework. Correct answer is money measurement and going concern concepts. 43. If a company's opening net assets were 400,000 takas, closing net assets are 650,000 takas, and the owner withdrew 50,000 takas during the year, what is the net profit for the period? Option 1. 300,000 takas. Option 2. 200,000 takas. Option 3. 250,000 takas. Correct answer is 300,000 takas. 44. A trade debtor owing 50,000 takas defaults completely. The firm writes off the entire amount and sets up a new general allowance of 20,000 takas for other risky receivables. The total debit charge to the current income statement is. Option 1. 70,000 takas within operating expenses. Option 2. 50,000 takas within operating expenses. Option 3. 30,000 takas within finance costs. Correct answer is 70,000 takas within operating expenses. 45. An item listed under bad debts recovered represents cash received from a debtor written off in a previous financial year. How is this disclosed? Option 1. Presented as other operating income on the face of the income statement. Option 2. Credited directly to trade receivables in the current balance sheet. Option 3. Added directly to the retained earnings account without passing through profit or loss. Correct answer is presented as other operating income on the face of the income statement. 46. What type of trial balance error will be caught automatically during the preparation of financial statements because the asset and liability balancing totals diverge? Option 1. A partial transposition error where a ledger balance was incorrectly extracted to the trial balance sheet. Option 2. An error of principle where a capital item was recorded as a revenue expense. Option 3. A complete error of omission where an entire journal invoice was skipped. Correct answer is a partial transposition error where a ledger balance was incorrectly extracted to the trial balance sheet. 47. A company purchases a customized software package for its finance team. The cost of training staff to operate this new system should be: Option 1. Expensed immediately in the statement of profit or loss under IAS 38. Option 2. Capitalized as a component of the intangible asset cost on the balance sheet. Option 3. Deferred and presented under current prepayments. Correct answer is expensed immediately in the statement of profit or loss under IAS 38. 48. A pending court lawsuit against a firm carries a possible financial obligation that cannot be measured with sufficient reliability. Under IAS 37, this must be: Option 1. Disclosed as a contingent liability in the notes to the financial statements. Option 2. Recognized as a formal provision on the face of the balance sheet. Option 3. Ignored completely until a final legal verdict is officially reached. Correct answer is disclosed as a contingent liability in the notes to the financial statements. 49. Which component of a complete set of financial statements provides narrative descriptions, breakdowns, and disaggregations of the primary figures presented in the schedules? Option 1. Notes to the financial statements. Option 2. Statement of changes in equity. Option 3. The Director's Audit Certificate. Correct answer is notes to the financial statements. 50. If an entity reports total assets of 2,500,000 takas and total equity of 1,100,000 takas, what is the absolute value of its total liabilities? Option 1. 1,400,000 takas. Option 2. 3,600,000 takas. Option 3. 2,500,000 takas. Correct answer is 1,400,000 takas. Quiz completed successfully.